Hello and welcome. In this video training, we are going to discuss how to trade futures contracts on the Binance platform, mainly the Perpetual futures. Then using BTC USD as the example pair. So basically, the basic thing you need to know is long and short. What does it mean to long and what does it mean to short? When you long, you are actually buying, and when you short, you are selling. So if you long, you make profit as the price goes up, and when you short, you make profit while the price goes down. So basically, in this sketch we have the price here, and we have the time here. So if you believe that the price of Bitcoin is going to fall, then you can short, and when you short, the price falls like this and you are making profit. But if the price goes against your prediction and starts going up, then you are making losses. And there also, when you are making losses, there will be a liquidation price. And when the price goes up to the liquidation price, unfortunately, your asset will be liquidated. So it's good to manage your risk very well in order to be able to make more profit and reduce your risk. And of course, in futures contracts, you are trading with leverage, and trading with leverage allows you to have a collateral, trading with more than what asset you have. You can trade in Binance, you can trade from 1 to 125 leverage. Okay, so we are going to talk about the how to select the leverage later. Then in the next one, for us to be able to long, we have the sample graph here, the time and also the price. So watching the chart of a Bitcoin, and you believe that the price is going up, then you can be able to put a long position here, and when the price goes up, you are making a nice profit. But if the price goes below your prediction, then you will be making losses. And also here you will still have a liquidation price. So in all this, you have a liquidation price which you are going to manage. You have to manage it also to put your stop loss if you don't want your asset to be liquidated. So if the price goes against your prediction, if it goes against your prediction here, when it reaches exactly here, your asset will be liquidated. Leverage deals with borrowing a certain amount of money needed to invest in something, a business or whatever you want to invest the money in. Talking about crypto, money is borrowed from the exchange provider, and the exchange provider in this case can be Binance. We are using Binance as example. The stake, we are using $100 stake. Now the leverage number 1, which is 1x, 1 multiplied by 100, you have a value of 100, and the liquidation price will be 100%. Now you can agree with me that the Bitcoin price can never fall by 100%. So when you trade with 1x, it's very safe, but you are not making much profit. You are trading with the amount you have already as your asset. Now when we have the 2x, when you multiply by 2 with 100, you have $200 to trade with, and the liquidation price or the liquidation percent will be 50%. When Bitcoin falls half by 50%, that is 50%, and then you get liquidated. Then we have the 5x. 5 multiplied by 100 is 500, and when the liquidation the price falls by 20%, you get liquidated. Then the next one is 50x. 50 multiplied by 100, we are trading with $5,000, and then the liquidation price will be 2%. When the price of Bitcoin falls by 2%, you get liquidated. Then the 100x, you get $10,000, and the liquidation price is 1%. When the price of Bitcoin falls by 1%, you get liquidated, and it also is risky, and you need to monitor or be very careful about your technical analysis and all that. Then the highest you can trade on Binance is 125x leverage. So when you multiply this by 100, you get $12,500, and the liquidation price is only $0.8, and the Bitcoin price needs to fall only $0.8 and you get liquidated. So you have to be very careful. And like I said, because of leverage, you are making more profit with a little amount you have, and it's not like the spot market. The spot market where you buy exact the price you have as your asset. You buy the exact price of BTC. But here you are buying, if you have $50, $100, $200, you can be able to leverage and buy more than what you have. So let's dive into our Binance and see how we are going to get it done. So of course, you should log into your Binance and go ahead and go to derivatives. Then on derivatives, we have the USDT features, margin features. We have the coin margin features. We have the leverage token and battle. So we are going to check on the coin margin features, and also from here also we can also switch to in between these two. So we go ahead and click here and wait for it to load. Then so here we are. Can change this to the light. Okay, so we are here on the futures market, and this is BTC USD. So basically we are trading BTC USD. This is the quarters. We are going to use the perpetual instead of quarters. So the perpetual allows you to trade without a definite time to end the contract, but quarterly we have a definite time that the contract is going to end. So we are going to make use of the perpetual. Now, using example like I said, BTC and USD, you can also choose any other pair you want to trade from here. As you can see, this is ETC USD, this is BNB USD. So anyone you want to trade on, this is where you select the pair. Okay, and remember, this is coin margin features. So if you check on the USDT margin features, so let's check the USDT, and as you can see, the USDT has pairs, coins in pairs of what? USDT. Okay, as you can see, this is ETC USDT. As you can see, all of them listed here. This is the pairs you can trade with USDT. So if you want to change your from one features type to other, you can also do it from here. As you can see, this is it, USDT margin features and coin margin features. So if you click here, you see that is only the pair of USDT that you see here. So this is it, BTC USDT. So basically the same procedure is followed in trading any of the pairs. Okay, so we go back to coin margin features, and then we change the BTC USD to perpetual. Instead of quarterly, I'm going to change it to BTC USD perpetual. Before we can trade, we actually need some balance here. We need some assets so we can be able to trade. So what do? We do a transfer. Now if you let's check USDT. I think I have some balance here. Actually, I have 10.52 USDT on my USDT margin features, but we are actually talking about coin margin features. So we go back to coin margin features. Please transfer asset into your futures account to start trading. So we do a little transfer from here, Then we are transferring, can either trade with USDT, Bitcoin, Ethereum, and all that. If you scroll down, you see the coins which you can be able to transfer to your coin margin features before you can be able to trade. So we are transferring Bitcoin to our coin margin features. So we choose the amount to transfer. Okay, so basically let's transfer this and then confirm. So this is what we have, and we can use this to do trade. This actually is for the purpose of the training. So this is very small amount, but just for you to understand how this works. So before we can explain here, let's first of all, okay, this is still on quarterly. Change it back to perpetual. So let's check what cross and isolated margin means, and also leverage, how to select leverage. So crossed, we choose here either cross or isolated. So when you choose cross, the cross is going to merge your balances across all your positions. So if you read here, it says share your margin balances across all open positions. So when you are sharing it, and also it has a high risk. When your asset is being liquidated, all your open positions will get liquidated. So, but if you are using isolated, say manage your risk or individual positions by restricting the amount of margin allocated to it. So this particular isolated, we isolate all your position differently. So if one position is going to be liquidated, it won't affect the other one. So we are going to use isolated for this sample. So then we have changed it to isolated. Then the next thing is what we choose our leverage. Therefore, like I said, we have 1x to 125x leverage. So all you need to do is you can either increase or decrease. Now the higher the leverage, the more profit you can get, and also the more risk of losing your asset. So your leverage is high, please manage your risk accordingly. So you can decide to leave your leverage on the highest, which is 125. So by clicking here, you can decide to leave it anywhere point you want. Like I said, it's good you manage your risk very well. Only trade on the highest leverage, on the amount you can afford to lose. So if you are not very sure of your technical analysis, or if you have not done your analysis very well, you try to manage your risk. So therefore, we are going to choose 25 on this instead of 125. So we click on confirm. But if you decide to choose 125, all you need to do is click 125, click confirm, and that's it. Then you can be able to come here and take your trade. So we are removing back to 25 and then confirm. And also, if you want to do some technical analysis here, you can as well switch from original chart to trading view. For now, it's taking time to load, but if I switch back to USDT features, I can be able to access the trading view currently, as it is very fast. It's always, like I said, it's just for you to use it for analysis. It's for you to use it for analysis. If you know technical analysis, these are the tools you can be able to use for your technical analysis. So we switch back to coin features, coin margin features. So here we have the original, and the price currently is 18,994.7. So these are the types of orders we have. On the under place order, we have the types of orders, which are limit order, market order, stop limit. So the limit order allows you to place either buy as to control the price you want to use instead of buying at the market price. So when you are you on the limit order, you are a market giver, while on the market order you are market taker. And market givers or limit, when you are using limit order, it reduces on your fee you are going to pay. But if you are buying from the market order, you are paying higher fees than usual. So here you can either type the price by yourself, or you can click on a particular price you want to use here. You can click on a particular price and it gets filled automatically. Or when you want to buy, you can also click from here. If you want to long, you can click from here and it gets filled automatically. So on the size, if you want to trade, here is the percentage size. If you want to trade on the percentage based on your asset, so we are going to take 100% of our asset. It is also good you trade bit by bit instead of using all your asset at a one position. As you can see, here is price and here there's no price. Therefore, it's going to take whatever price the market is at the time you want to either long or short. So the stop limit, on the stop limit we have the stop price and also the price. Now the stop price is going to be a trigger price that will get this one executed. So for more explanation on stop price or stop limit, so this is just a little ebook that I wrote on Beginner's Guide to Crypto Trading. So we search for stop price and here we go. To be able to understand this order type, let's break it into stop price and limit price. So the stop price is basically the price at which limit order is triggered or placed on the order book, and limit price is the main price of the limit order that was placed on the order book. This means that once your stop price has been reached, stop price, which is the trigger price, your limit order will be immediately placed on the order book. The stop and limit prices can be the same, so you can make them to be the same. It is not a requirement. Actually, it would be safer for you to set the stop price or trigger price a bit higher than the limit price for sell. That is if you want to short, or a bit lower than the limit price for buy orders. Okay, so exactly that's how it is going to be set up here. So if you don't want to pay higher fees, you can either use limit order or stop limit order. Okay, this is still on quarterly. We change it back to Perpetual, and then I selected 25. Okay, so we are back to where we're supposed to be, and this is 30 minute chart, and we believe the price will go up from here a little bit higher. Instead of falling, we assuming the price might go up a little bit higher. So what we are going to do here is we use the market order and then 100%. So when you are using 100%, then we click on buy and order submitted, and we have it here. This is our position, and the entry price is $18,850.2, and this is the current market price. This is our liquidation price, and then this is margin ratio, and this is our margin, which is actually the amount we entered with. I selected, as you can see, I selected. Then this is the profit and loss. It's on green. If it is on red, which means it's loss, but if it's on green, this is profit. That is 0.31% currently. So if you click, if you want to close the position, you can actually close the position here. Okay, so if you want to close all the positions, that is if you have multiple positions open, if you click close all, it will close all the positions. So if you want to use market price to close this position, you click on market price to automatically close. If you want to use the limit order, also you can use the limit order and put the price here, then it will be closed. And then it will ask you how many percent of your position do you want to close. Do you want to close 10% of it, 25%, 50%, 75 or 100% of it? So kindly put the price here, and then the how many percent, put the percentage here, and then you either use market or limit. So we can add advanced take profit and stop loss from here. As you can see, like we traded with a little amount of Bitcoin, and if you are entering the price here, it won't come out a little big, or a little the loss also won't come out a little big also. So let's see if the market price, when do we take a profit? If the market price reaches, let's say 19,900, let's take a profit. And also if the market price drops to 18,800, it will close our position. Then we click confirm. It has been confirmed, and this we have the order here. We have two orders, sell and sell. The first one here, it has not been filled. This one is for stopping our loss, and this one is for taking our profit. So you can actually decide to close or to cancel them. So this is exactly how to open a position, and also how to close it. If you want to close it from here, you can actually close it from here and put a price tag here when you want to close it, either to take a profit or to stop a loss, right? So this is basically how to trade coin margin futures on the Binance platform.